why hundreds of U.S. banks may be at risk of failures. You could see some banks either fail or at least, dip below their minimum capital requirements. Claris Group analyzed about 4,000 U.S. banks, and here we go, found 282 banks faced the dual threat of commercial real estate loans and potential losses tied to higher interest rates. The majority of these banks are smaller lenders with less than $10 billion in assets. Most of these banks aren't solvent or even close to insolvent. They're just stressed, Brian Graham said. Co-founder and partner of Claris Group told CNBC. That means there will be fewer bank failures, but it doesn't mean that communities and customers don't get hurt by that stress. Tom?
So there is a crisis that's about to happen. And so he's saying, you heard he said, there'll be fewer bank failures. What do you mean fewer bank failures? That's like saying, hey, when the hurricane just passes by, there'll be less rain, but it's still raining. Yeah. So that's what's going on. Here's a number for you. $962 billion of commercial paper refinancing in the next 18 months, ending around end of second quarter next year. So actually, we're coming up on a year.
12 months,
yeah, it's 12 months out. I was thinking since the beginning of this year. $962 billion. Now, if the rates go down, that way they could refinance. Oh, wait a minute. The Fed just said the rates will be higher longer.
Getting warm.
So there may be fewer bank failures, but there's going to be bank failures. There's going to be commercial real estate that goes into receivership. And this isn't going to be like 1928 and the Great Depression, but you're going to see a ton of this stuff. And the big private equity firms and Jamie Dimon are ready for it because their balance sheets are ready to pounce.
And it's interesting that they use that term. They're not going to be insolvent. They're just stressed. So if you ever go to a doctor, they're going to do something called a stress test on you. They do the same thing for banks. Basically, how much money, how much cash reserves do you have in the house? Basically, the FDIC, what is it, $250,000 if you, anything above that. I remember when you interviewed your buddy, your good buddy from WAMU. They couldn't pass the stress test. I think they lost, $300 billion?
They went from being a $330 billion company, WAMU, to Chase buying them for $1.9 billion.
Yeah. So that was the biggest bank failure, and that was obviously in 2008 because it was all tied to the mortgage. What was the term that they used for mortgage? Well, no income, no assets, but the toxic mortgage.
Also mark to market. The value of the assets dropped, and suddenly...
That was the biggest bank failure in American history, but all the other biggest bank failures we've ever seen in American history were in the last 12 months. Signature Bank, First Republic, Silicon Valley. I think First Republic had $200 billion insolvent. Silicon Valley, another $200 billion. Signature Bank, $100 billion. These banks better be ready to pass the stress test. The first time it was tied to mortgages, now it's tied to interest rates, correct?
If you're trying to use money that requires banks, you can't trust the banks. It used to be Americans thought they could trust American banks. Now they're realizing that they can't trust American banks. So the first order impact of the banking crisis is people think, well, maybe the money I had in the bank's going away, and so I ought to put it in a bank in cyberspace that isn't controlled by the government or by the bankers, and that's Bitcoin. The second order impact is the solution to the banking crisis is print more dollars. And if you print more dollars, the actual monetary inflation rate goes 10%, 15%, 20%. So you think, why do you think those bonds crashed? Because they're actually claims on dollars. Do you really want to hold $1 billion of Zimbabwe dollars? What if I offered you 10 billion Zimbabwe dollars? I mean, the answer is it's going to a nickel. Okay, so if the paper currency keeps crashing, then you can't own anything that's currency related. You can't own a currency derivative. You need to own something that politicians can't print more of. Okay, well, that's oil, that's land. But the problem is, try hauling 100,000 barrels of oil from where you are to London, where you want to be. How are you going to do that? It's simple. If people lose faith in the banks, they lose faith in the currency. When they lose faith in the currency, they lose faith in the government. When you lose faith in the bank, the currency, and the government, and someone says, what can you trust? The answer is you can trust Bitcoin because you can custody your own asset, you can run your own node. And at the end of the day, even if the Chinese want to shut it down, they can't. If the Russians want to shut it down, they can't. If any nation state wants to shut it down, they can't. If the US wanted to shut it down, they can't. And so everybody wants something that they can trust that is beyond the reach of a corrupt politician, a corrupt corporate executive, or they don't have to be corrupt. They can just be well-meaning, trying to do the right thing in a misguided fashion and meddling with your economic life.
If there's ever been a time for you to make that argument and make it aggressively and scream it off the top of your lungs is right now, especially the fact that 3 out of the 4 largest banks that ever gone out of business in the history of America were done in the last 90 days. You got WAMU was the biggest, which was September of 2008, $307 billion. First Republic was $212 billion. That was May 1st. Silicon Valley Bank, March 10th, $209 billion. Signature Bank, March 12th, $110 billion. And the next one, closest one to it, is IndyMac. If you remember, IndyMac was only a $31 billion company back then in 08. So someone may be listening to this and say, oh my God, man, if this guy's right, maybe I ought to start moving my money out of my bank as soon as possible. And, you know, Jamie Dimon, I know these guys are trying to get people not to take their money out of the bank and have too many bank runs, because if they do that and, you know, some are taking their money out of their bank and putting it in the money market, is Michael saying take my money out and put it in Bitcoin? Or are you saying maybe take it and put it in a bigger bank? I'm a little concerned, Michael. You sound smarter than me. What should I do? The average person's thinking that right now. So are you saying that these 3 out of 4 largest banks that went out of business that happened last 90 days, there's more to come and things are going to get uglier than what it's been last 90 days? Or are you just saying the fact that if you keep your money in the bank, at any point they can make that decision and control your money?
I'm saying that money is a store of value, and there are multiple monies and they're not created equal. So let me give you the world's worst money. The worst money in the world is like Argentine pesos or Venezuelan bolivars or Zimbabwe dollars or Nigerian naira. Weak money. The official inflation rate in Argentina is 105%. But that's the official rate, which is that understates it. The actual inflation rate would be higher. And if the inflation rate is running 100%, that means your money is losing half of its value every 12 months. That means that within 10 years, you have nothing. Okay? So bad money, bad currency or bad money loses all of its value over the course of a few years. In Venezuela, you lose all your value in 36 months. In Argentina, in 10 to 20 years, the Argentine peso was 1 to the dollar 21 years ago. If you had $1 million 21 years ago, the Argentine peso right now is about 480 to the dollar. So that's not a 99% loss. That's a 99.8% loss, right?
In how many years?
21 years. Okay. So what I'm saying is you don't have money if you have weak currency. Now let's take strong currency. Well, the strongest currency in the world is the dollar. That's not money. You're losing 99% of your wealth over the course of 90 years in the US dollar, maybe more. The US dollar, the only difference between the US dollar and the peso is whereas it takes 20 years to lose your family's fortune in the peso, it takes about 90 years to lose your family's fortune in the dollar, right? My house in Miami Beach was $100,000 in 1930. It was appraised at $46 million a few years ago. Do the calculation. It's on a path to be worth $100 million, which means that the US dollar will have lost 99.9% of its value over 100 years. Warren Buffett knows this. Charlie Munger knows this. Basically, the bottom line there is your money in the bank isn't money. Okay, so the answer is you shouldn't have any money in a bank. Right? You're basically losing 7% of all your wealth every year in a good year. If it's the dollar, you're losing 15% of your wealth in a not good year. If it's the dollar, you're absolutely losing all your money over the course of a decade. So that's kind of weak money, awful money is developing world money, the Lebanese pound. The Lebanese pound got devalued. I mean, you would have lost all your money in 5 years if you had the pound. The strongest money, decent money, okay money was gold, but not great. The strongest money in the world is Bitcoin, because Bitcoin is absolutely capped at 21 million. It is global money. You could take $1 billion of Bitcoin across a border. You can transfer it to a counterparty, and no government can interdict that, and nobody can inflate that. And so my answer there would be, you can't trust any bank. You certainly can't trust a bank in Lebanon. Read about Lebanese banks. You can't trust a bank in Africa. You can't trust a bank in Asia.
Michael, but if you call Chase, their customer service is amazing. How was the customer service with Bitcoin when you called the 1-800 number?
There's nobody working at the bank of Bitcoin to steal your money. Right?
Thank you for calling Bitcoin. This is John Doe calling. I can't do nothing for you. You got to make the decision yourself. But I just want to say hi to you.
But, Bitcoin is a bank in cyberspace run by incorruptible software. It's going to keep your money. If you are incompetent, then you're going to suffer the consequences.